Everyone wants to take their business, their skills, to the next level. Small and mid-sized business owners have exceptional insight into how to do this. They endure and thrive because they find ways to overcome the challenges that come their way, and they can teach us valuable lessons to apply to our own companies and lives. Stephen Nooner, founder and owner of Alkali, a company with a unique process that helps businesses more effectively buy and manage their insurance programs. And Bob Gibbons, builder of Riata Commercial Realty, a real estate advisor and tenant advocate, are two prominent Metroplex businessmen who, along with their weekly guests, will ask their and your probing questions, finding impactful solutions that will help you reach for the next level. Here are your hosts, Stephen Nooner and Bob Gibbons.
Welcome to the next level, conversations that propel business. This is your host, Bob Gibbons.
And Stephen Nooner.
Thanks for joining us today. We're excited you're here. And we have a great guest today. We're looking forward to talking to Casey Kronbach. And before we get to that, though, he actually gave us a pretty cool quote, Stephen, I thought was pretty interesting.
I think it's definitely interesting.
Go ahead and read it for us.
Isn't it weird that we have one hand that knows how to do everything and then one hand that just sits there like, I don't know how to hold a pencil?
You don't even know who wrote that.
No.
So that's kind of funny because most people are either left-handed or right-handed, I guess, is the point. But I'm a little weird. I throw a ball in right with my left hand, but everything else I do with my right hand. So I don't know whether that leaves me
just weird.
Confused?
Yes.
Strange? Okay.
All right. Well, I would like to introduce, let's get to our guest. Very special guest. I feel like he's becoming a fast friend. He's already a friend, but it's been a little bit like 7 degrees of Kevin Bacon. We know everyone else in each other's lives pretty much, and now we've finally met. Casey Kronbach is managing partner of Knightvest Capital. Knightvest has $800 million in real estate assets across 39 apartment communities in Texas. They employ 295 people and have been in business since 2007. You can learn more about Knightvest at knightvest.com. That's Knight vest.com. Welcome, Casey.
Thank you. Thanks for having me, guys.
Well, we like to always start off with a thing called gratitude and something positive, exciting, etc. And Casey, what are you most excited about or thankful for today?
You know, I am very excited and very thankful for the health of my family. The kids, I've got 3 kids and a wife, and they're all, you don't really realize how good it is to feel healthy until you're sick or something's wrong. And everything is great right now and just, no drama. It's just smooth.
Ages?
11, 9, and 7.
Wow.
Yeah.
Very nicely spaced.
Yeah. Thank goodness for school starting.
Yeah.
You know what I mean? You know what I mean?
It's more traffic, but a little bit of a break,
yeah.
Right?
Less traffic at home anyway.
Yeah.
Well, Casey, I want the audience to learn more about you, and I can't think of a better place to start. You have just a crazy, cool story about how Knightvest actually got started. So can we start off with that? Would you mind sharing that?
Yeah, I'm happy to. And tell me if I get long-winded, because sometimes I'm obviously very passionate about our business. So, give the cut the rope sign. No, we started in 2007. Myself and another guy named David Moore, and we were we were trying to flip houses because we watched a lot of late night TV and thought we could make a lot of money doing that. Everybody's a bazillionaire that flips houses,
Amen.
But we started buying houses at the property tax foreclosure auctions the first Tuesday of every month, downtown Dallas and downtown Fort Worth, and bought a couple houses at the absolute wrong time in 2007 and 2008, as everybody can remember what that time was like.
Yeah.
But we were there one day. It's a room of about 40 people, and we were there to buy a house, and a constable stood up and said, there's a half-acre commercial lot that's for sale. It's on the tax rolls for $9,000. We'll start the bidding at $9,000. We weren't there to buy the lot, so we weren't planning on bidding on that. Next thing you know, he said $9,000. No one bids anything. He says, okay, open bidding. We're like, what does open bidding mean? We didn't know what that was at the time. So some guy in the front row says $100. And I remember vividly looking at David saying, and someone said 200, and David or I can't remember, we reached our hand up really fast and said 300.
You're pulling out your wallet, seeing how much cash you have?
Yeah, because you have to pay cash at these auctions. We had cowboy boots, and we had cash in our cowboy boot. Seriously, And we didn't have any money at the time. It was like every dollar we had in our bank was in our boot. which subsequently the auction was right next to the jail, which was kind of an interesting feeling. But anyway, so we bought the lot for $300. I'm like, what just happened here? And so that's great. And so next thing you know, he said there's a 28 unit apartment community on the tax rolls for $488,000, and no one bid on it. It said open bidding, and we started bidding. And next thing you know, we walked out of there with 28 unit apartment, a 16 unit apartment across the street, and the lot for $11,000.
So you had no plans to get in the multifamily business?
No, are you kidding me? No, we had no idea what a lease was. It was crazy.
$11,000
for 44 units and a half-acre lot. But we get to the property and we're like, because we're pencil pushers, so we've never actually figured out how money gets from a property into the bank. We know what to do with it once it's in the bank, So we had to figure out how to get the rent from the property into the bank. And we're like, let's hire a management company. No one would manage it when they heard the address because it was a really rough part of town. So we said, let's go ahead and start doing it. And we started knocking on doors, and we started doing leases, and we started, making keys, and anyway, it turned a really bad situation to a positive situation. We learned a lot of things. We learned how if you treat people well and you give them a nice quality place to live, that you get the best people in the area. And yeah.
All right. So what I want to know is, what was your return on investment on those assets?
We actually partnered up with a great organization called Cornerstone Baptist Church in the area, and essentially we had bought a couple properties after this one and didn't need the money, and so we essentially sold it to them for their basis. And now it's really those properties went from slumlord status, where people didn't have carpet and didn't have appliances and didn't have, it was really bad, didn't have AC in July, to now they're halfway houses for prison ministry.
Nice.
Down in South Dallas. Yeah, great experience.
The sad part is that the people are in that situation that are in those apartments are often the people that are most taken advantage of in our society.
Absolutely.
And I've seen that many times. I used to sort of be a little bit of a slumlord myself, and I went, and a woman paid me one day too much, and I gave her money back.
Good.
She started crying and kissed me.
Wow.
I thought,
oh, Jan might be listening, Bob.
Well, she knows. I think we better move on.
Now we know why you lowered the rent. Casey, one thing that fascinates me about your business is that it's seemingly the competing interests of having investors, right, and then residents. Can you tell me like how you guys manage that?
It's a lot. So we have 12,000 units across 39 properties, and that's like that's a good sized Texas city. I mean, we probably have 25,000 people living in our properties, and we probably have a couple hundred investors, and so it's a lot every day. So we spend a lot of time working with our people, trying to make them better so that we can have a better experience for our investors and for our residents. It's definitely a full-time job.
So how do you balance that?
I
mean, how do you balance it?
I got to get my people in. We can ask them.
So it's just kind of a holistic approach. I mean, make the community better. Then you're going to have better returns, better all that for everyone involved.
Yeah, absolutely. I mean, our quote unquote mission statement is what we call our calling. And basically our calling is to exceed the expectations of all of our stakeholders, and whatever that might be. And a stakeholder obviously can be a vendor, it can be an investor, it can be a resident. And our goal is to exceed their expectations on every level.
That's awesome.
So we try. Yeah, who knows if we do it well, but we try.
So your investors, are they individuals? Are they institutions?
Both. We have some high net worth family offices and some kind of fund to funds, and some individuals that you just kind of meet along the way that want to put some money in the deal. And
So how do you differentiate yourself to the investor from your competitors?
I think we do a pretty good job. When we first got started, we told we didn't, who wants to give people that didn't know what they're doing money to invest in a property? And we told people, we're like, we will work really, really hard. We will not steal your money. And we'll do the best we can, and that's all that we can promise you. And I think we still do that today. I mean, we try really, really hard every day to do what's right and to maximize our investors' returns.
What are you most excited about in your business right now?
What am I most excited about in my business right now? We've had a really strong growth pattern. It's been really fun kind of watching the people that have kind of, come along with us and watch them grow. I really enjoy seeing people get better and to expand their role, expand their mind, and expand their responsibilities, make more money. I think that's been kind of the most exciting thing that I've been a part of since we started in 2007.
That's cool.
Yeah.
And with all that growth, I mean, I'm sure there's some challenges. What would you say is your biggest challenge?
Well, I mean, we literally have gone from, in 6 years, we've gone from, and I looked at this yesterday, oddly enough, September 1st, 2009, we had 7 employees. So in 6 years, we've gone from 7 to 295 employees.
Wow.
Oh,
Yeah, it's pretty cool. I mean, it's pretty neat, But the hardest part is you can't multiply your own time. And so maintaining the culture that we want, the entrepreneurial spirit, the bootstrap kind of mentality, get out there and get the job done, even if it's not your job, still your job type mentality has been really, really tough. And so we spend a lot of time trying to maintain that culture.
One thing I've heard a lot about from people that are investors in residential and multifamily is that they're expecting a big rent spike because through the downturn of 2008 to 2011, there was really no new construction, but there were still people moving here. And so we have this really out of balance situation. We have a growing population, but we don't have enough places for them to live. So what are you seeing and how are you guys dealing with that?
Yeah, it's actually it's quite remarkable, quite honestly, especially as it relates to Texas. I mean, we are having, I think Dallas itself is having, Dallas-Fort Worth is having 360 roughly people moving here a day. Wow. Which is just, I mean, it's 10,000 a month. And then that doesn't, Houston's getting more people, at least, I don't know, we haven't seen the latest statistics until, the oil and gas pricing, we'll see what that does. But there are so many people moving here. And out of those people moving here, first of all, it's hard to find a house. It's still hard to get, I don't know if you guys have tried to refinance your house or try and buy a house, but it's still hard to get financing, even if you've got good credit and all that, it's still tough. So, the majority of the people that are moving here are not necessarily looking for a house. I mean, homeownership's at a 10-year low. I think it's at 63%. The demographics are changing within our population. The homeownership for minorities is low 20%. So as that continues to grow, homeownership will continue to go down, and there will be more people renting. And the reality is, you can't build new construction for an affordable price, to the renter. If you build new construction, which all the new construction, if you look, it's all in Uptown, it's all Legacy Center. It's $2,000 a month. Well,
it's insane.
It's crazy.
Yeah.
And so out of 360 people moving to Dallas-Fort Worth, I mean, there might be, I'd say half of them need to go ahead and rent. So we're seeing a lot of demand right now for workforce housing between $800 and $1,100 a month.
Yeah, I hear the rents in Uptown are averaging about $2.45 a foot, a square foot.
Yeah.
And I know there's a new development up in Frisco, and they're considering themselves a bargain at $1.95.
Yeah.
I'm still thinking that's $1,950 a month for 1,000 square feet.
Who can afford that? And no one can afford that. I mean, you have to have 3 times gross monthly earnings for that.
Yeah, New York City.
Yeah. So.
Well, after a break, we're going to learn from Casey's experience about how he and his partner have turned some breakdowns into breakthroughs.
Looking forward to it. We'll see you on the other side.
And now, Confessions of a Recovering Landlord.
This is Bob Gibbons with Riata Commercial Realty, and I am your recovering landlord. After 20 years as a landlord, I now use that experience only for the benefit of companies that lease or buy office buildings and warehouses. Today's confession: never exercise your renewal option. Now, I know that sounds crazy, right? Why would you get a renewal option if you don't ever plan to use it? Well, a renewal option is really just a reservation for your space, which prevents the landlord from leasing your space out to someone else, leasing it out from under you. Some options actually bind you to an extended term before you even know what the rental rate will be. But that rental option was created 3, 5, or even 10 years ago when you signed your lease and may not work for you today. Fortunately, there is a way, an easy way, to renew your lease without the risk of exercising your renewal option. To learn what that is, please contact me at www.texastenantrep.com. Again, that's texastenantrep.com.
Want to create a breakthrough in your business or personal life? Here's a tip. Stop shopping for insurance and insurance agents. Begin looking for a way to more effectively buy and manage your insurance. At Alkali, that is exactly what we provide. The freedom you create by changing this mindset alone will make an impact. Plus, you can stop listening to all the insurance commercials on TV and radio, unless they're funny, of course. Are you an insurance novice or just want to take things to the next level? Knowledge is power. Come join us for the single most important class that you never took in business school. We have the following upcoming classes that we teach through Collin College and the Small Business Development Center. Thursday, September 24th, Protecting Your Business 202. Thursday, October 15th, Healthcare Reform. What the health is going on? Thursday, November 19th, Protecting Your Business 101. To sign up or learn more, visit us at alkaliservices.com. That's alkali, A-L-K-A-L-I, services with an S.com.
My name is KC Kronbach. I'm with Knightvest Capital, and I just had the best time of my life wasting my time with Bob and Steven on the next level.
We are talking with KC Kronbach. Welcome back, everybody, to the next level. We are talking with KC Kronbach, managing partner of Knightvest Capital. Knightvest has over $800 million in real estate assets and over 39 apartment communities across Texas. If you want to learn more about Knightvest and KC, visit knightvest.com, Knight vest.com.
All right, and we're going to go into the segment we like to call the high-low, and this is where we're borrowing from Zig Ziglar and his Wheel of Life concept, where we look into the 7 major areas of life: career, social, financial, family, physical, mental, and spiritual. And we talked to our guest about the highs and lows in his business and life and all those areas today. So, Casey, whenever we look at the high for you right now, in those 7 categories, what's the thing that comes to mind as your big high right now in the last 12 months?
Definitely family. Life is really good right now, and I just got married about 3 months ago.
Congrats.
Yeah, thank you very much. Thank you. And so it's been really great having my wife and 3 kids kind of all merging and together, and everybody's happy, and it seems to be going really well. So that's definitely my high at the moment. Yeah.
Wow, that's a lot to take on at once.
Yeah. I'm just happy to have everybody together, and just family is a good thing. It's a wonderful thing. So,
any big plans or any ways that you're trying to take that forward?
Just, like to travel and like to spend time together and uninterrupted time. So this is our 4th, coming up next summer, we're going to do our 4th Disney cruise.
Oh, nice. Wow.
Yep. So we've been in Northern Europe, we've been to Alaska, we've been to the Bahamas, and I think this year we're going back to the Bahamas. So it's good times.
And the Disney cruise, 4 times back.
4 times.
So what draws you back?
My kids, they love it. They absolutely love it. Although we've come back one time with lice. One time, no, I'm not kidding. It's disgusting. You got all these germy kids running all over this boat. It's crazy. Strep throat was one of the times. This last time we went, we didn't come back with anything. But yeah, just wash your hands.
That's fun.
Disney, the statements of our guests are not necessarily reflections of the.
The next level has nothing to do with that. We will accept you as an advertiser.
What about the low?
Well, other than the lies.
Yeah.
Well, license strep. I'm really happy, and so I've been just kind of really lazy recently and just laying around. So I'm at the heaviest weight I've ever been. I topped out at 202 pounds, which I don't know, for me is a lot. I think my ideal weight's probably 185, 190. Anyway, I call it my happy fat because I'm really happy. And
people will be able to see this on video, and we are using a wide angle lens.
Okay, do it. That's fine. I'm sitting down, so we're good.
Yeah. He's wearing black.
Yeah, wearing black. And I don't understand is God's funny sometimes. It's like, the older you get, you're slower your metabolism. But the older you get, the worse your health is. And so you think, just God's tough on you sometimes.
You just got to work that much harder.
I guess so.
Work out, do that interval training.
Yeah.
Keeps us humble.
CrossFit.
Yes.
Too old.
Well, all right. So what are you doing about that?
Right now, I'm currently doing nothing. No, I've decided to go on a salad for lunch, kind of bandwagon. Instead of doing the cheeseburger, doing a salad, and results are TBD.
Don't hang out with me. I'll tear you down, man. We're going to transition a little bit here. One of the things we like to do with our guests is, for the audience, something we call the experience impact segment. And this is where we told Casey before he even came on the show that we're going to ask him to give up looking good and really just get transparent and share things about his business, really just so we can have mutual learning, impact, inspiration, because we can all learn from each other. So, Casey, what would you say has been your biggest breakdown, breakthrough while growing your business?
Yeah, I spent a lot of time thinking about this one because we've had a lot of breakdowns and breakthroughs. Obviously, going from, to 295 employees over 6 years has been really challenging.
You mean you didn't just turn the key?
No, I didn't just turn the key. It just happened. So my partner David and I think the one thing for me, and I didn't talk to him about this before the show, so he'll hear this live, I guess. But it was I think December of 2010, and we had done a couple deals and had been barely gotten them done type thing, and we were getting ready to buy kind of our first big deal. It was like a $10 million project at the time, which was a lot. It's a lot of money now, but really a lot of money, especially back then. And we had our lead investor, and about 2 weeks before closing, they came to us and said that they only had about half the money that they needed to get it done. And,
Oh, wow.
Which, when you're starting off in a new company, you have, you're buying a property, you have to have earnest money up. And at the time, basically all of our money was up for earnest money. And we found out 2 weeks ahead of time that we had to raise something like $1.5 million. Well, we'd never done that before. We didn't know what we were doing. And so we literally, it was kind of a aha, like, let's get on the phone to start calling people. And we called everybody we knew, from our attorney to our insurance broker at the time.
Yeah.
We basically scrapped together $1.5 million in about a week and a half. And it was a scary time. I mean, if we had not raised that money, we could have stopped what we were doing. And we literally took $5,000 from one person. So,
All right, so tell me your pitch. The phone rings. Somebody answers it. You're trying to get money from. What did you say to them?
Work hard and we won't steal from you. No, I mean, it's a good property. It was in North Dallas. We just, the returns. We have since sold the property, and it was, I believe, over a 30% return to our investors annual. Yeah, no, it turned out really, really well. But it was just tough. And if you remember in 2010 how the economy was, I mean, there was no loans. People were, their liquidity was gone. It was just a really tough time. Nobody knew where we were going, and what was the market going to look like in 6 months. And so, I think just by being men of integrity and working hard, people trusted us. So they gave us their hard-earned money.
I mean, the hardest thing in those times seems to be getting over or overcoming the investors' lack of vision.
Yeah.
It's like back in the late 80s, early 90s, the market was far worse than it was in the, 08, 09, 10 range. And to get people to think that, hey, it is going to come back someday.
Yeah.
These markets run in cycles. It's not going to be this way forever.
Yeah.
That's the hardest part. Even if they have money, which many of them did, you couldn't get them to cut loose with it because they couldn't see where it was going.
Yeah, we're excited for the next. I know I shouldn't say this is not going to be very popular, but the next downturn, we're excited for it. I mean, now we've been through it, we've seen it. We want to be prepared to take advantage of the next cycle.
It's the Warren Buffett strategy, right?
Exactly.
You'll be back at those courthouse steps.
Probably,
bidding?
probably not.
Hey, one thing you mentioned about growth that I'm interested in is you said you started with you and your partner intending to buy single-family houses.
Right.
So your business plan had to change dramatically to go into multifamily.
Changed, yeah.
How did you guys negotiate that, not just with investors and such, but between the two of you?
I think I'm very fortunate in my business partner and I. We started off as partners, and then we became friends. And I feel like we've gotten to a level where it's more family. I feel like he's my brother, and so we fight constantly. I mean, we used to fight verbally, loudly, a lot in front of people. It was crazy. People would look at us like we were nuts, and then we would finish our argument and we would go to lunch and not even think about it again. And we've matured since then, so we don't do that so much anymore. But I think that there's just a level of trust between the two of us, and I know where his strengths are and he knows where my strengths are, and we just kind of figured out, and we constantly bicker, and but we think that ends up with a good result at the end. So.
Well, with all that you guys have going on, all the growth, where do you have to focus most to stay on track?
I think it goes down to people. I think every business is a people business once you get to a certain size, and in business in general, you're dealing with people. You're not dealing with the company per se. So we spend a lot of time just working with our people and trying to get them to make the same decisions that we would make every day. As we get bigger, it's harder and harder. I think. When we started, we used to hire people based on capability, and then we would end up parting ways based on character or cultural fit. And so we've tried really, really hard to bring people on that are cultural fit and that have character, and we can train the capability. That's been kind of eye-opening for us, and I think it's been successful.
And it's working.
Yeah, it's working.
All right. So one of the things we really like to give our listeners is sort of the top three, the three things that you have developed or the biggest insights you've had over the years that people can really use and apply in their own businesses.
Yes.
So what are those for you?
I think I didn't realize how important cash flow was to a business until we have a business and you need cash. Cash is hard to come by,
Right.
So I didn't realize the struggle that business owners kind of went through managing cash flow. I'd say that's number one. I think number two, and this is where I think I'm genius, so I'm just going to say that, you surround yourself with people that are smarter than you, and you overpay them. Hopefully our team's listening to this and they agree with me. I don't know. We'll see. But
we're going to call them later.
I definitely know that they're smarter than me, and hopefully they feel overpaid. I don't know, but it's just cheaper to do that than try and save 10% on someone's salary. That's number two.
If somebody were to take the money they spend on retraining and the downtime and all the lost productivity of turnover and just pay people that amount, that'd probably solve all the problems.
Yeah, and honestly, smart, productive people need to be paid. They can get paid someplace else. I'd say number three, though, is do one thing really, really well and don't deviate from it. It's nearly impossible to be an expert at two things, let alone one. So we always say, we want to dive deep and not dive wide. No belly flops. We want to go head first into the water and do one thing and do it very, very well.
No splash.
No splash.
Casey, what's next? If we're all sitting here together 3 years from now and we were to look back to today, what has to happen in your life, personally, professionally, for you to feel satisfied with the progress that you've made?
I struggle with this one a lot. And Steve, you and I have talked about this a lot. I think that to look back 3 years from now, to be successful, I want to see visually see a positive impact on people around me, whether it's the kids, family, or it's the people that work on our team, or it's our vendors, or if it's our residents. I want to look back and say, wow, you're better today than you were 3 years ago, and I was a part of that process. So that's what would define my success.
Now, these 295 people that you have in your company, where are they physically, geographically?
All over tech, 4 major markets, and I don't mean that against El Paso, but Austin, San Antonio, Houston, and Dallas.
Okay.
I love El Paso.
So where the bullet train's going to go?
Yeah, right. Yeah.
We hope.
2080.
I'm going for the Hyperloop. Hyperloop for me.
Oh, yeah.
Come on, Elon Musk, yes.
That's the one where you get in a tube and he shoots you out?
Shoot me in a tube, baby. I'm space. I'm all
It's kind of like my cash at the bank drive-through. That's funny.
Well, Casey, just the reason why you said that, thank you for being here. Thank you to the audience. Just really appreciate
thanks for having me.
Who you are. And if you'd like to, again, learn more about Casey in Knightvest, it's knightvest.com, Knight vest.com. And we will have a website, the nextlevelshow.com, Next Level Show. I always mess this up. Nextlevelshow.com will be up by the time this airs. So thank you guys for tuning in with us today.
And we'll be looking forward to in a week with another wonderful guest. We're excited for everybody that's coming in. If you have somebody that you think would be a great guest, let us know. Go to our website, fill out the contact us. We'll talk to you later.
Have a great day.
You have been listening to The Next Level, Conversations That Propel Business with Stephen Nooner and Bob Gibbons. Join us every Tuesday at 1:30 p.m. for more prolific conversations that will take your business to the next level.